Thanks for checking out this week's FinPrep Trading and Investment video newsletter. All right, so quite a week. Volatility did materialize as expected. A very nice gap up on Monday morning with considerable follow through here on the S&P 500 SPY ETF. So closing above the 50-day moving average. Oversold though in the short term, clearly just due to the nature of the rally here, quite fast. So the piece that is interesting here, as well as on the weekly charts, we have kind of a nice little double bottom on your ultra fast weekly stochastic, and you're still in oversold territory as well, even on your fast weekly stochastic. So there still could be further room to run here in SPY in the coming weeks. The one piece that kind of calls this into question is NASDAQ not really playing ball. So we got Dow breaking out to all-time highs. NASDAQ not so much, right? Tranny's doing well, small caps doing well. So that is something to be aware of. It's a question of, is it just simply a change in leadership, sector rotation, what have you, or is it a sign that there is something interesting lurking under the waters? Just something to keep in the back of the mind. Treasuries did sell off. We were pointing out this downward channel for quite some time here, and in fact did fail to hold the lower end and produced a considerable sell-off. The piece here, though, the damage may have been done. There could be potential support here at the 120 level, where on the weekly chart we have your 250 as well as your 200 week moving average. And even failing that, channel support's not terribly far away, down at approximately 116, which essentially, as you can see, the base for many of these long-term rallies. So the damage may have been put in place. We'll see what happens. But any relief in TLT would be nice to see. Dollar index certainly did actually get that support mid-range at 25, gap up Monday morning, similar to equities, and then rally. So this may continue overbought in the short term, but it may continue out to play in the weeks ahead, where having now seen that mid-range support hold, perhaps revisiting the highs of around 26 and a quarter, essentially the upper trend line of this most recent price channel, which UUP finds itself in. Dollar index ETF. Gold. So this piece that we were looking at last week kind of called it into question. This little oddity here actually didn't end up holding, and gold sold off quite sharply. Nasty ending to the week for gold. So actually may end up getting that opportunity at 115, 114 and a half ish zone. Currently oversold, as you can see, but looking forward for a potential opportunity in gold. And in particular, if we take a look at the gold mining index ETF, these are the juniors, so extremely volatile, as you can see, down 8% on one day alone. So nothing to get too crazy with. But the interesting piece here is it is at the 250-day moving average, as well as the lower trend line here, which has provided support for a bounce, and here we are at number 4. So if number 4 can hold, this would be an interesting piece. Obviously oversold given the very nasty nature of the ending of the week. And it also lines up nicely with the 50-week moving average. We're a bit off, but again, if we can get a nice rally beginning early next week, GDXJ could certainly be an interesting place to look. So we'll keep our eyes on that. Copper, my gosh, spectacular rally in copper, no pun intended. Did take a short actually on Thursday as we approached that upper trend line. Yeah, I mean, the thing was gapping up approximately 3% every morning, so very strong moves within this breakout from the base we were discussing, approximately year-long base, and actually got a proper breakout, which is nice to see. But yeah, so this trend line touching all-time highs stemming back to 2011, basically kissed that and even gapped up above on Friday, but then quickly rolled over into the session. So covered our shorts there, may still have further to run, actually on the downside, perhaps to the 90 MA or the prior highs around 27. So we'll see what happens, but definitely copper is extended here. So it was fun to catch a little bit of the short side, but we're done with that piece. And then finally, guys, taking a look at junk bonds. Junk bonds, kind of textbook here as well. So break out of this upward sloping price channel, and then kissed back right at the upper end, and then sold off. So nice movement there. That doesn't bode particularly well for continued upside in J&K. On the other hand, looking forward to the week ahead, we basically are sitting at potential support at this 250-day moving average, and then even flipping on the weekly chart, we have the 50-week moving average cupping in nicely below. So any reprieve again in J&K and TLT, in theory, should help. Perhaps provide a bit more of the rocket fuel needed, not knowing that we'll get kind of this excited week as we did as result of event risk and so forth having passed, and just people repositioning in anticipation of changes in policy and so forth. But certainly any relief again in fixed income markets could open the door to our 220, 222 kind of zone. But we'll see what happens next week. A lot of good action this week, and we'll keep you guys tuned for next week. Thanks for listening.